Welcome back to the channel. So we're going to be going over moving averages. So we have two moving averages that I like to use anyway. We have the exponential and the simple, the EMA, SMA. So I like using the EMA. I'll go over the difference. So EMA and SMA are similar in what they each measure trends, right? The two averages are also similar because they are interpreted in the same manner and are both commonly used by technical traders to smooth out price fluctuations. There are some differences between the two measurements. However, the primary difference between an EMA and an SMA is the sensitivity each one shows to change in the data used in its calculation. SMA calculates the average of price data, while EMA gives more weight to current data. The newest price data will impact the moving average more, while older price data having a lesser impact. Okay. More specifically, the EMA gives a higher weighting to recent prices, while the SMA assigns equal weighting to all values. Alright. So on my chart, I'll be using a 50 and a 200 EMA, right? So if anyone's new and they don't understand what an EMA is, what a moving average is an average of prices, yeah. So as price is always wants to respect the 50 EMA, so price breaks above the 50 EMA, that means that we're in a buyer's territory. Likewise with when it breaks lower than the 50, then we're in a seller's, right? And I use a 200 for a dynamic support and resistance. Okay, that's like the last of my barrier. So it respects, so it breaks this, it breaks the 50, respects it, pins off the 200. There's a pin right there, and then bounces back up. So that's like my dynamic support and resistance. It moves with me. Here's another pin there. See right here, price broke the 50, broke the 200, come down, tried retesting the 50, pinned out, but obviously I think it pinned this 200 and then went back up, all the way up, all the way up, all the way up. We're still above the 50, price broke. So if you just take this trade alone, I personally, I never really take these trades alone, but if you was to take the trade alone, yeah, that's 138 pips. So you could have entered here, closed here. And there are some EMAs where people take the crosses of this EMA and that EMA. I personally don't use them. I just use these as support and resistance, dynamic support and resistance. That's all I use it for. Here we go again. So price is broken through, come back, tried retesting it, come back up, broke the 200. Away we go. Could have closed right here as soon as it closed up. So that would have been 71 pips. So even if you're just taking a few pips, so this was at, oh, it's the Asia session really. So you take the break here, you take the close over here, 25 pips. So you want to take quick pips even here. That price comes down, dips down, comes back up, breaks these through, retest the 50, and then up it goes. That would have been a lovely trade. This is new. Yeah, open it with New York. New York is about. New York is here. So it's made this nice little hammer, gravestone. I think gravestone or hammer. Don't think it's gravestone. Maybe a hammer or doji. Gone up. Broke this 50 MA. Come back down. Retested it. Away we go. And that would have been a nice little trade as well, to be honest. You could have took it up to 60 pips and closed here. If you really wanted to, keep it safe. Closed right there. That would have got you 35 pips. So it's all down to you how you want to trade. But personally, I don't trade this alone. I use this with my other strategy, which eventually I want to show you guys a quick strategy. But yeah, that's how I pretty much use it as dynamic. You will see that eventually price will always respect the 50. 200 there, just my backup. But yeah, you'll see price will always respects the 50. Okay, so on my next episode, I'm going to be showing pivots. Yeah, we'll go over the pivot points, and then eventually we're going to put all this together. So like, subscribe, comment down below for any videos you want to see in the future. We can go over them. Any questions, put them down in the comments. But yeah, like, subscribe, and we'll go over that. Yeah.